This show is intended for general purposes only, as individual situations may vary. Statements made should not be relied upon as recommendations or solicitation. When discussed, past performance is no guarantee or indication of future results. Nelson Financial Planning offers securities through Nelson Ivest Brokerage Services, member FINRA, and SIPC.
Good Sunday morning. This is Bud Hettinger. Next on News Radio 93.1 WFLA, the longest-running radio show in Central Florida, Dollars and Cents, with my good friend Joel Garris from Nelson Financial Planning. You can call him at the office this week at 407-629-6477 to schedule your free consultation to discuss your retirement plans, or you can talk to him right now at 407-916-5400.
Good morning, ladies and gentlemen, and welcome to the program Dollars and Cents. This is Joel Garris of Nelson Financial Planning, and you're listening to News Radio 93.1 WFLA. The program aptly titled Dollars and Cents, where for well over 30 years we've been helping you make sense of all of those different decisions that have anything and everything to do with your dollars. On the program today, we'll talk a little bit about sustainable investing, socially conscious investing. It has a lot of titles and names to it. Generally, it falls into categories of environmental or social or just general governance types of ideals that corporations should follow. We continue to hear more and more of that. I suspect that will not be going away anytime soon. So I thought it would be good to just chat a little bit about that. We've certainly covered that topic in the past, but it's been a while, so we'll cover it again on the program. And then we need to follow up from what we started last week, talking a little bit about what someone should do when their spouse passes away. A bit of a process and a procedure, and particularly during that period of time, it can be overwhelming at the very least. I think last week on the show we got started on kind of what you should do now as a married couple, and then the segue is, okay, if you did what you were supposed to do, and we'll recap that on the program. If you did what you were supposed to do as a married couple, then it should be a little bit easier, but there's still a lot that you would need to do. So we'll cover that. And then, of course, today is April the 7th, which means that if you're keeping score on the calendar, your taxes are, in fact, due a week from tomorrow. So perhaps you might have a tax question. And if that's the case, then that's one of any of the topics, well, as long as they're financially related in some form and fashion, that you can call on in to the program and ask us about. So 407-916-5400, toll free 1-866-916-5400. Those are the numbers to call on in and be a part of the program. If you don't really want to get on the air for any number of reasons, then you can send us an email. And that email is simply my first name, Joel, Joel, at NelsonFinancialPlanning.com. I know that's a little long, but that's just simply the name of our company, NelsonFinancialPlanning.com. And it's just my first name in front of that with a little at sign, and you can send us an email. So that's how you, too, can get engaged in the conversation today. So let's begin on what's on tap on our end. So last week on the program, we talked a little bit about some of the things that that married couples should do. You know, obviously some of that's pretty straightforward. Things like making sure that your state documents are in shape, making sure that there's an understanding of your financial assets, what you own and what you owe, and most importantly, making sure that your spouse is going to be able to assume control and ownership of those should something happen to one of you. All very straightforward. Requires you to just simply do a review of all of those different accounts, again, what you own and what you owe, and go through that process. It's a process of kind of sitting down and communicating, laying it sort of all on the table, so to speak. The one kind of thing that you might not think about, which is incredibly important in today's world, is all of those electronic passwords, all those passwords to get into the miles on the credit card, or get into the bank account, or get into the Netflix account even. Those are ones that perhaps your spouse may have set up, and they're using sort of a different password than perhaps what you use. Each of you kind of have your own version of passwords, and to have that in some form where it's easily findable, so that each of you can use it, or in the event that something happens to one of you, the remaining can use that without any issues. So I guess that would be a kind of a new one versus what we might have said 20 years ago, whereby you definitely, in today's world, with everything being on the computer and electronic, need to have some place where you've got those user IDs, those login credentials, and those passwords. So certainly something to kind of work on. I know we struggle with that on a personal basis. I have my password that I typically use and that I use at the office is a different one than my personal, and my wife has a totally different one that she uses personally and then at her office. So it's like 4 different versions of a password running around, and it's easy to lose track of that. So hence, write it down on a sheet of paper is the recommendation. Don't save it in a document on your computer that says passwords. Okay, that's not going to work. As easy and convenient as that would be, and I get it. Okay. That's not a good idea. As my IT guy reminds me at the office, being convenient and being secure are mutually exclusive items when it comes to technology. So take the road of writing it down, pencil on paper. I'm always a fan of that, if you will. Anyway, so that's some of the things that you should do when both of you are still, on this good planet. Now comes the harder part when one of you departs, and the surviving spouse then would have a lot on their plate, and it can be quite overwhelming. We encourage folks in that situation, when they come in to chat with us at the office, to just take it slow. There's no race to try and get it all done within a week or two. Just work through methodically those what you need to do, and it starts really going back to some of the things that you should have already talked about when you were married, which is getting a handle on what you own and what you owe. It's particularly important on the own side, on the asset side. At the end of the day, if you keep paying the mortgage and keep paying the credit cards, then credit card companies won't get that fired up as long as they're getting paid. But in order to be able to use and access things like bank accounts, things like investment accounts, those types of things, you do have to go through the process. And it is a paperwork process. However, most places should be more than willing to assist with that production of the paperwork that is needed when a co-owner passes away. The tricky thing on that is that often those documents are asked to be stamped. Okay, and this is where people get a little confused. Is they think that on those financial types of documents, particularly if you're like changing the registration on a investment account or changing the ownership on an IRA account. Most people think that when the documents talk about getting a stamp, that they think it's a notary stamp, and that's actually not the case at all. The hardest part on these documents for most people that we find is getting the right certification, if you will, of the signature. A notary stamp is not what those financial documents are looking for. What those financial documents are, in fact, looking for is something called a signature guarantee stamp. Two very different things. To be a notary, of which we are, I think it was a 40-hour course, and then annually I send in money. Okay, not that hard. The signature guarantee stamp is a whole different ball game, and basically certifies a signature up to the limits of that stamp. That signature is basically as good as cash. So, depending upon the stamp, you can have a $250,000 limit, a $500,000 limit. The reality is that that stamp is considered as valuable as cash. For example, we have that stamp at the office, and that stamp at the office is kept under lock and key in my personal desk. I'm the one that signs and uses that stamp. We do have a backup in the office in case I'm out of town, but the reality is that it is something that is under lock and key. That's probably going to be one of the hardest things to actually track down, because what I hear from folks as they share their stories in the office is that most banks are reluctant, and understandably so, given the level of liability that comes with that signature guarantee stamp. Most banks are reluctant to do that, so it becomes a little bit of a detective process to try and figure that out. But most of those documents, once a spouse passes and you go through the process of starting to pull together the paperwork, most of those documents are in fact going to require a signature guarantee stamp. So just be aware that it is a little different, or should I say a lot different, from a notary stamp. We've got some other things, a lot of other things for surviving spouses to consider and to work through. Much more to talk about on that. But first, we're going to take a little break, and then we will come back and continue the conversation on what surviving spouses should be doing once they're left in the situation of it just being them. Also, open lines to talk about anything and everything. Taxes might be a hot topic, considering we're 1 week out from April 15th. 407-916-5400. Toll free 1-866-916-5400. This is Joel Garris of Nelson Financial Planning on Dollars and Cents on News Radio 93.1 WFLA.
This is Bud Hedinger. You know, you can talk to Joel Garris of Nelson Financial Planning right now on Dollars and Cents about anything to do with your money by calling 407-916-5400. Give him a call. It's time to make sense of your dollars.
Hey, welcome back to the program, ladies and gentlemen. Dollars and Cents here on News Radio 93.1. Talking a little bit about what a surviving spouse should do in the unfortunate event of a spouse passing away. I was talking a little bit before the break about that process of trying to gather up all the documents and then the paperwork that needs to be completed, requiring something very different than a notary stamp, something called a signature guarantee stamp, that can be tricky to track down. But there is a definite big difference between the two, and most financial documents and institutions are going to require more the signature guarantee stamp and not the notary stamp. So it really does start with that process of trying to gather together all of those assets, what you own and what you owe, and certainly that's where that process starts. It also would make sense to reach out to the attorney who prepared your estate documents, just to see if there's anything else that needs to be done that was unique to your estate plan. So it's important to kind of have that conversation. Also, from a tax perspective, things are certainly going to change. You still get the current year of they pass to be able to file a joint return, but then the next year it will shift to just a single return. And that's where your tax rates would become more compressed. So often we find that we need to increase the tax withholding that's being done in order to offset the fact that you're going from those joint tax tables to the single tax table. So that certainly, the passing of a spouse certainly has a ripple effect on the tax return as well. And then with Social Security, there still is a $255 death benefit. So you would want to file for that and look at those benefits that you're eligible for. You're certainly probably going to have a conversation with the folks at Social Security at some point in terms of making sure that you're maximizing out your Social Security benefit, stepping up to the benefit of your spouse. If, for example, they were generating more on Social Security than you were, those types of things, you will need to reach out to Social Security, not just for that $255 death benefit, but also you will need to reach out to make a decision on how much and how to adjust your Social Security income, because that would certainly be something that you would not want to ignore, given that it would be money in your pocket. And then another good idea for a surviving spouse is reaching out to your spouse's current employer. This is where you may find that there's more going on than you realize. Maybe there's a retirement plan or a 401k, or maybe there was some life insurance policy that the employer offered as part of a standard employee benefit, or perhaps your spouse may have been paying a little bit more into that insurance side and have a little bit more coverage. So the importance of reaching out to the current employer to ask about retirement accounts, or, well, less so now in terms of traditional pension plans, because fewer and fewer offer them, but certainly worth asking the question. Life insurance, and then and also health insurance as well. I mean, the health insurance issue can become a big one, particularly if the spouse that passed away is, in fact, the one that's providing the health insurance for the family. So you've certainly got some conversations to have with the current employer on a number of different fronts, beyond just the regular 401k or retirement plan, but also on the life insurance and the health insurance fronts. Those can become very important. Obviously, you'll need a bunch of death certificates. Depends on the nature of the accounts, but it's more than you think. It's not 2 or 3. Pretty much everybody asks for an original death certificate, and so consequently, you need most likely more in the neighborhood of 10, probably more like 15, depending upon how many different accounts are out there, because each one of them is going to need that as part of the documentation, the paperwork that we were talking about in the last segment, that does in fact require the signature guarantee to be able to have those accounts get transferred over. So a bit of a process, if you will, one that is always very difficult given the circumstances that led to that having to go through this process, simply because the spouse passes, and that can be a very, very difficult and emotional time. But just really know that if as the surviving spouse, then there's just simply a process to go through, to work through, gathering up the documents, getting the paperwork done. And again, most financial firm should be at least helpful in directing you to the right form. Some will even go so far as to fill it out. I know we do that at the office on a regular basis, is to get as much of that paperwork all filled out. So the only thing that you have to do is sign, and then being able to locate that signature guarantee, which is relatively unique and very different from a notary stamp. And then going through the process of sort of tracking down the various different assets that are out there, including reaching out to current employers. So those are just some of the many things to kind of put into the process of what you should be doing when your spouse passes away, to sort of get on top of all of that, because there'll certainly be more. At the end of the day, you need a whole new financial plan when that happens, in order to make sure that the income is going to be sufficient, where the income is coming from, and what the expenses look like now that there's just one of you. So that means that you've got to really go through that process of really creating a different financial plan. What should have been happening while you were both alive is that there should have been a discussion of, okay, what's it look like if something happens to one of you, and how that income ultimately gets adjusted, because now you're clearly to the point where that has gotten adjusted. So you certainly want to make sure to update your personal financial plan, particularly once it's just one of you. That's part of that process of contacting the estate planning lawyer, the accountant, in terms of your taxes, and then of course whoever the financial advisor is. Those are the kinds of things to get on top of once you find yourself that it is just you. So some things to really be thinking about there as it relates to couples and what happens when one of them passes away. A bit of a process, if you will, that is certainly not easy to navigate, but hopefully we've given you some thoughts to remember as you go through that navigation process. So on the program, on the next segment of the program, we're going to talk a little bit about this environmental, social, and governance types of approaches when it comes to investing. We hear a lot about sustainable investing. We hear a lot about environmental investing. We hear a lot about those types of concepts. Interestingly, the origin of sustainable investing, of socially conscious investing, actually traces its origins back about 15 years ago to the year 2004, when then UN Secretary General Kofi Annan wrote a letter to over 50 different CEOs of major financial institutions, challenging them to find ways to integrate environmental, social, and governance ideas into their business plans and the capital market. So it's a concept that really has its genesis traced back to 15 years ago, and so we'll talk about it when we get back here on Dollars and Cents. This is Joel Garris of Nelson Financial Planning on News Radio 93.1 WFLA.
This is Bud Hedinger. You know, you can talk to Joel Garris of Nelson Financial Planning right now on Dollars and Cents about anything to do with your money by calling 407-916-5400. Give him a call. It's time to make sense of your dollars.
Hey, welcome back to the program, ladies and gentlemen. Dollars and Cents here on News Radio 93.1 WFLA. My name is Joel Garris of Nelson Financial Planning. The program Dollars and Cents, where we help make sense out of all of the different things that have anything and everything to do with your dollars. Started the setup for social conscious, sustainable investing, kind of a discussion that we want to have. just to familiarize yourself with those concepts. They've been around for a number of years. We've certainly talked about them on the program before, but they keep cropping up, so we thought it would be a good idea to chat a little bit about them, as we like to do on the program, is to keep our listeners in the know, if you will, on the various different investment topics and investment conversations that you might hear out there on a regular basis. In the meantime, though, we did get an email from David, who is asking a similar type of question about a concept and what it all means. And David's question has to deal with shorting a stock. And it says, "Hi, Joel, would you please explain how shorting a stock works? How can someone make money buying a stock at a certain price and then selling it at a lower price and walk away in the black?" Well, that's a great question. Short selling, not for the novice or the faint of heart, because the first thing you have to realize when you do a short sale is you are basically borrowing the stock. Okay? So you borrow the stock. Now, how do you borrow a stock without actually really buying it? Well, you borrow money. You do that on margin. When we talk about margin, that means you're borrowing money against assets that you have in that particular investment account. You borrow money against those assets, and then you use that money effectively to borrow shares, if you will, that you then sell. So we'll use a simple example. So let's say that there's a company, ABC company, and they are currently selling at $50 a share. You basically borrow $50 off your margin account and then correspondingly enter a sell order for that company's shares that you have borrowed. So you do go through the process of ownership and selling, but because it's borrowed money, then you didn't have to put your own money into it. The concept that makes short selling work is that, in fact, you borrow the money on it and then agree to pay it back later, right? I mean, because if you own the stock and then sell it and then buy it back later, how is that really short selling? Because in essence, you're just buying the same thing later on at a different price. With short selling, the concept there is that you borrow the money and you use a margin account in which to do that. So you borrow against the margin, you borrow the stock, you sell it at $50 a share. Before the time and the time elapses where you have to pay back that margin account or pay back that loan, the stock price drops. You then go and buy the stock. That's when you actually buy the stock at that lower price and then replace the stock now that you bought at the lower price. You use that to replace the stock that you borrowed in the first place. So let me see if I can summarize that real quick. Step one, I borrow money to borrow a stock. Okay, I take a margin. I then go ahead and capture that price on the stock that I borrowed, and let's say that's $50 a share. The price of that stock goes down. I then go back into the market and actually buy that stock at the lower price of $40 a share, whereupon I then present that stock that I now own, because I bought it at $40 a share, as replacement for the stock that I originally borrowed at the sequence of events. Hopefully that makes sense to you, David. The reality is that it is fraught with pitfalls and certainly not something that we recommend as an investment strategy for retirees, because it starts with borrowing money. And that's not really a good thing when it comes to retirement. It starts with borrowing money, borrowing stock, and then selling it, capturing that price, and then ultimately hoping that the price goes down. If the price goes up, then you wind up having a margin call, which means that you've got to present some dollars to pay down the loan that you borrowed in the first place. That then can spiral out of control pretty quickly, because if you're getting a margin call, the financial institution isn't willing to give you, a couple of weeks for that. They expect to have that money in there ASAP, and that's what happens that with short selling that can get out of control very quickly. Is if in fact the price goes the other way, then you are exacerbating your problem because now you're going to have to throw in additional cash to cover the fact that you've got borrowed money outstanding. So certainly something that we don't recommend to retirees, that's for sure, and pretty much anybody else that just wants to accumulate wealth over time. Short selling would not be a strategy for that in any way, shape, or form. So hopefully, David, that gave you a little bit more insight on what shorting a stock and how in the heck you make money on it. The concept involves borrowing money, and you basically borrow money to capture the price at where it's currently at, with the notion that later on, when the price goes down, that you buy the stock at that lower price and then present those shares as replacement for what you borrowed in the first place. If the price goes up, then it's a whole different ball game. You're going to have to show up with cash to offset that margin call that that you're gonna get. And so consequently, those are the steps in the process of that margin process, which is all hand in hand with shorting a stock. So great question, David. We appreciate the opportunity to answer questions like this by email, and we will go right straight to another email. Actually, this one is from David. Oh, apparently, everybody's working email today. So David actually has a couple of recommendations for easy password storage, referencing this morning's show. Interesting as always. And yes, there are a couple of apps out there that do provide for easy online password storage rather than having a document on your computer that simply says passwords. David's suggesting KeePass or KeePass, KeePass, and then the other one is pwsafe.org. I prefer. He says he prefers KeePass, but password safe is easier to use for a non-IT person. Well, then definitely that would be me. Password safe. These are very secure and provide a vault. I think there's also a bunch of others as well, and he mentioned some other ones as well, some online services and the like, and then having a checklist for both pre and post death tasks if you have one, and yes, so he's asking for a little checklist. So, yes, David, we can email you a spouse death checklist. It actually comes to us courtesy of the ideas we talked about. Come to us courtesy of a Wall Street Journal article. So we can certainly send that to you. And since that's such a great idea, David, we'll go ahead and post it as well on the various social media channels that we have out there, Facebook, Facebook, and the other ones we have out there is Facebook and Twitter, and you know the bunch. Okay, there's a bunch of them out there, so we'll post that as well, David, and appreciate the commentary on some other ideas for our listeners in terms of some password protection vaults, if you will, that are available out there rather than just having a document that says passwords on your computer. That's probably not a good idea. Anyway, so a couple of different emails. We got to slide to the break because they make us break on the quarter. So we'll slide to the break. We come back. We will tackle the concept of sustainable or social conscious investing. Certainly get a lot of conversations about that. And we'll also scroll through and make sure that we've covered the emails this morning. When we get back, we will continue the conversation here on Dollars and Cents. This is Joel Garris of Nelson Financial Planning on News Radio 93.1 WFLA.
This is Bud Hedinger. You know, you can talk to Joel Garris of Nelson Financial Planning right now on Dollars and Cents about anything to do with your money by calling 407-916-5400. Give him a call. It's time to make sense of your dollars.
Hey, welcome back to the program, ladies and gentlemen. Dollars and Cents here on News Radio 93.1. Had a couple of good emails from a couple of Davids. One David was asking about shorting a stock. The other David had some good ideas on some online apps, Password Safe and KeePass, for storage of passwords. I know that there's a ton of them out there throughout. So there are certainly some good options rather than just simply having it in a document on your computer under passwords. That's probably the least secure approach, but probably the one that most people do. And yes, we will post some of these things that we've been talking about on the program in terms of what married couples should do beforehand, and then what a surviving spouse should do after that. It actually comes to us courtesy of the Wall Street Journal and a book by Kathleen Rell. So they've got a little chart, which actually is pretty good little chart to reference. So we'll send that off to David, and also for our listeners, put it up on our website as well, Facebook and Twitter and all that kind of stuff. So look for that. We will do that most likely beginning part of this week, Monday or Tuesday of this week. We usually put the show up on Monday, so we'll probably wind up putting up this checklist as well. So as we shift into the last segment of the program, we wanted to chat a little bit about this concept of sustainable investing, of social conscious investing, basically investing that takes into account, excuse me, environmental or social or governance ideals. Kofi Annan back in 2004 wrote a letter to a number of major financial institutions, and it's sort of widely credited with starting the concept, if you will, of this taking into account different things when we look at the business of a company. Part of my reaction to this conversation is that well-run companies, I think, fundamentally have always sort of taken these concepts into account. They just haven't necessarily highlighted it, if you will. But if you're a well-run company, you stop and think about these concepts, right? So you've got in environmental, right? I mean, if you're a well-run company in today's world, you really should be sort of taking into account the environmental issues that that are present out there. Now, true social conscious or sustainable investing really looks at things like resource depletion, waste and pollution, deforestation, climate change, those types of concepts. And so they've gotten a little bit more specific, perhaps over the years, in terms of the types of things that are considered those types of factors. The reality is that I think that's always sort of been out there, particularly from a regulatory point of view on the waste and pollution side of things. The social concepts that generally are encapsulated in this notion of social conscious investing deal with things like working conditions, health and safety, employee relations, diversity, things like that. And again, those are certainly concepts that most businesses, or particularly well-run businesses, should be sort of taking into account. The problem with some of these concepts is that they do have a little bit of a political agenda, a little bit of a political bent, and that doesn't find its way into investing, or that shouldn't find its way into investing. Investing is looking for opportunities that are the best available opportunities, with the hope and the expectation that those opportunities are going to pay off. Where the political bend gets into it, I just think that that shouldn't be part of investing, simply because when you're investing, you should be investing for an extended period of time. If you're really investing, okay, then you shouldn't be buying a company for the next 3 months. You really should be buying a company with a view of 5, 6, 7 years. That's what investing is all about. And if you have that type of time frame perspective, well, that's going to be independent of a political cycle and the winds of change. If you're interested in an investment solely because person A is in the White House versus person B, I would submit that that's probably not a real investment that you're making. You're just trying to do a little bit of trading, if you will, based upon the external result of who's sitting in Washington, and that's where I chafe a little bit at these socially conscious, sustainable investing buzzwords, because they miss sort of the point of what investing really is. And for the most part, I think you hear a lot of these words used, and some funds have even gone so far as to change their name to incorporate that into the title. And when that happens, I think, is it really going to change how investing is, or is it really more of a marketing tool? And sometimes I think, particularly when it comes to the financial services industry, they do a great job at marketing, and less so at on the investing side. Certainly, that seems to be the track record. The last category is these issues of governance, where we talk about executive pay, bribery and corruption, political lobbying and donations. And again, this is where you can get into the political stuff, and tax strategy. So a lot of these concepts, I think, are important. I think a well-run company is obviously going to make sure that they're not polluting the environment, make sure that they're following the rules there, to make sure that they have a safe workplace environment, because, again, there's an incentive to do that. If you've got employees that are constantly getting injured, then it's going to cost them the company money as these people sit at home, or ultimately, put a lawsuit that you didn't have a safe working environment. And then, at the end of the day, you probably shouldn't be paying bribes to do business. So I think fundamentally these concepts have always been there. They've always been a part of evaluating what it means to make a good company. But I always get concerned about that they have a tendency to be a little politicized, depending upon your point of view of the world, and also they wind up getting a little bit more a marketing focus rather than actually making a difference when it comes to investing. Bottom line, investing is a long-term process, and not one that should be subject to, okay, well, this person got got elected in Washington, so I'm going to do this. The reality is that the winds of change in Washington sweep every 2 years. That's a pretty short time frame when you think of it from investing in something that we would say is not really investing at all. So certainly some things to be aware of, certainly some concepts that you hear a tremendous about these days. I think those concepts have sort of always been around, but in today's world, you just hear them more direct or more talked about than perhaps ever before, as a result of the commentary that you hear a lot about companies and being good corporate citizens and those types of concepts. I think fundamentally, good companies have always sort of served that role, and some of this certainly is marketing by the financial industry to make people feel like there's something more to it than ultimately there really is. But certainly an important concept, and one that you hear a lot about with many funds picking up names of social conscious or sustainable, and some going so far as to change their names as well. To me, that smacks of marketing, not of really fundamentally changing the way you invest. If you're really investing, it should be independent of the waves of the pendulum swings on the political side of the spectrum, because that is very short period when the political pendulum can swing in today's world. Anyway, we will wrap it up and get it on out of here. Thank you so much for listening. David and David, thank you for the emails. Appreciate the opportunity to answer your questions in that format. We will talk to you all next week. This has been Dollars and Cents with Joel Garris of Nelson Financial Planning on News Radio 93.1 WFLA.
This is Bud Hettinger, and you've been listening to Dollars and Cents with Joel Garris of Nelson Financial Planning. If you missed any part of today's show or want to listen to it again, check out the radio show at www.nelsonfinancialplanning.com or connect with them on Facebook or Twitter.
This show is intended for general purposes only, as individual situations may vary. Statements made should not be relied upon as recommendations or solicitation. When discussed, past performance is no guarantee or indication of future results. Nelson Financial Planning offers securities through Nelson iVest Brokerage Services, member FINRA, and SIPC.